Yo, what's up guys, welcome back to another video. So in this video we're going to be talking a little bit of entries, and so before we get into the video, don't forget to hit the subscribe button and drop a like or a comment. You're free to ask any question, and let's get diving right into the video. So firstly, before looking for entries, of course, the first thing we need to tackle first is our bias. We need to know the direction of the market before deciding to look for entries at all. Doesn't matter the time frame you are taking entries from, always make sure your direction is correct. Right now, if you observe from here, you can already see we are going to start from this particular point. You already see that the bias is already bullish based on the bullish momentum here, and you can see where price is coming from this particular level. And if you go to the weekly time frame, it's more clearer on the weekly time frame. Oh, sorry, on the monthly rather. Okay, you can see price is coming right from this monthly support, right? If you go to the weekly already gave you a break of structure, which means we are currently bullish. If you go to the daily gave multiple break of structure to the upside, signaling that we are overall bullish at the moment. So of course, what are we going to be looking for? We are going to be looking for buys only, right? And in the market, there is a way you look for your direction and understand directional bias to an extent. In a bullish market you can sell, in a bearish market you can buy, but buying on a bearish market is risky, selling on a bullish market is risky. So there's always a concept you have to follow. Like for me now, I have a confirmation and a reversal concept I follow before I decide to sell on a bullish market or buy on a bearish market, right? So this is basically the first entry, right? So this is the particular level price was rejecting from the daily. So what do? We look for our sweep of liquidity and a break of structure. So what do we do next? We'll be expecting price to come to this apex, right, creating liquidity for it. And I've explained this before. When price comes, rejects from a particular key level and gives a massive breakout like this, let's say this particular rejection now, then price give a massive wick to the upside just like this, a massive body candle to the upside just like this, we are no longer expecting price to come to this particular apex. We're expecting price to go RBS or QM. At this moment, which one do you pick between the RBS and the QM? The one that is the closest to the liquidity, right? So if you observe here, I'm using this particular level and this is the RBS. If you observe, price invalidated this level, creating liquidity for this one. And the reason why I didn't adjust to this particular level right here, instead I use that breaker block. If you go to the daily time frame, it has an alignment on the daily time frame. You can see that particular level is aligning with this daily key level right here. So that's how I took this entry on the 4 hours time frame, right, targeting this particular level because this is an obstacle aligning with a daily resistance. That's why I was targeting this particular level. As you can see, full TP. Then of course we're still going to be looking for buys. So what eventually happened here? Now when a daily level, don't ignore daily key levels, right? You can observe this particular level right here. Though it was broken, it came back down, it got broken, and right here market still respected it. Let me clear this up. You can see how market still respected it, right? This is automatically a QM from this particular level. You can see how market respected it and started selling to the downside, coming to this weekly level we marked out before, monthly level we marked out before. As you can see, price did the same thing to that particular level. It broke out and we tested on that particular level, showing you how important and how high probability daily key level is, right? So I marked it. I saw price reacting from this level, right? You can see price, there is also an OCL here. You can see where price came to use it. So these are high probability OCL. Why is that so? It has liquidity protecting it. but let's focus on this particular one first. You can see where price is coming from, reacting to this particular level. And what do we do next? We'll go to the 4 hours for our breakout. So this is, let's clear this out first. So this is the rejection point, right? You can see where price reacted from this level. 4 hours already gave us a breakout. So the next thing we're doing is our apex, right? This is supposed to be our entry. Now, based on the fact that this week, this candle wick right here is too wide open, so our stop loss is supposed to be below this level, but this is too wide for us. So what do? We're going to refine down to lower time frames, either the 3 hours or the 2 hours. So what I did, I refined down to the 2 hours time frame, and that's how I got this apex level right here, inducement protecting it, and that's how I took my entry from here, targeting this obstacle. Also, you can see how price got to TP and instantly started dropping back down. Right now, you can see price, I think price respected the same thing right here. Okay, let me see something. Alright, so you can see how price started dropping back down, and this particular entry is basically a break and retest. You can see how price broke past this level. Where is price coming from? Here. You can see how I'm putting storyline on top storyline. I don't just enter direct, I always use confirmation. Right, this particular level right here is supposed to be my entry, but what did I do? I waited for price to come back here and use this particular level. Right, and same thing here, this was supposed to be my entry. You can see inducement. Let me drop down to the 1 hour time frames or the 2 hours. Okay, this is the level price is coming from. You can see inducement protecting it, but just to be sure and be safe, I didn't enter direct. I waited for a re-entry, and price came back to this particular level, and I sold down to this point right here, straight to TP. This particular one is just a simple break and retest. Now, if you observe, I was buying and I sold here and I bought here, and I'm planning on selling again. So this one, I think I got this on the 45 minutes or the 30 minutes rather, but I know it was on the lower time. Exactly. So this is basically simple entry, just a break and retest entry. When you have a level like this and price break past it, it's a break and retest entry. And if you observe, price is coming from this particular zone right here, and we are supposed to pay attention to the apex. But why didn't we use the apex? Because of this massive breakout. And I told you guys in the previous this particular setup right here, I think it was this one or so. When price gives a massive move like that, we don't really pay attention to, we no longer decide on using the apex, right? We use the ROBS. Now that doesn't mean the apex is not relevant. You can see how price came back later to use the apex. It's just that that particular moment, price is not going to use the apex. It's going to make a lot of moves before coming back to use the apex. Now you can see how price used this particular level. If you observe, I didn't take this particular trade because my target was already taken out, so that trade was already invalidated for me. But price later came back, sniped that particular entry, went up, then started selling back down. Right now, I emphasize something about a particular key level. Now I want you guys, don't ignore daily key levels. Just because you've used it before doesn't mean it's no longer useful. Let me give you an example to show you that. Now if you observe right here on the daily time frame, you can observe this SBR level. You can see how I used it to sell here. Like what I explained, price gave a massive breakout. Of course, we are going to be paying attention to this SBR. You can see how I used it to sell here price came back to this ROBS right here to push price back up. Price broke past that level. What did I do again? Same thing repeated. I sold from that same level. I bought rather from this same level. So you can see how price tapped and started flying back up. So don't ignore daily key, especially higher time frame key levels. Don't ignore them. They are very useful, and if you want to get high probability key levels and high probability setup, start from the higher time frame, mostly the daily mostly the daily rather. You can go as far as weekly, and you can come down to the 4 hours, but daily mostly. Get a good key levels from daily time frame is very, very important. When you spend more time on the higher time frame, it's more clearer for you. You understand the market better, trust me. So that will be it for this video. And if you want to learn how to trade this particular strategy, you can just drop a comment below the video, and I also drop my Telegram and my WhatsApp number there. So if you guys are interested, you can DM me and we'll discuss. So thank you guys for watching. See you guys on another video. Peace out.